Howdy ho, everyone, and welcome aboard. Thanks for joining me for Trading Buddies on this Monday, the 29th of January. Nearly February, but not quite. It's nice to have you on board as always, and thank you very much for being there. I will dive straight in and have a look at what's going on around the place. First up, we've got gold. Gold on the hourly chart looks like it's had a big move today already, and for that reason, I doubt that I'd be looking to trade a breakout. I will, however, go through that process and tell you why I won't be doing that. Just hang on 2 secs. I have to do one more thing. There we go. All sorted. I think we are streaming today because I got that message. Last week it was a fault in the system somewhere. Don't know why or what, but it looks to have fixed itself. There we go. All right. So gold has, as I said, looks like it's had a little bit of a rally today. Come off the high already at, you could argue, a strong resistance level. Strong because high. Had another crack at it. Don't know if it wants. Well, we'll go through it or not. We shall see. Nice little bounce off the daily pivot and the weekly pivot there. Wow, what a start to the week. Gapped up, closed the gap, and went. Interesting. Anyway, the range that we have before us that's obviously the high, the current candle, and the low would be there. So we've got a whole bunch of dollars to play with here, 15 of them, roughly. So let's move $15 already today, and I think that's probably enough. If I'm looking to trade this long, I'm trading straight into resistance. And DR, what's that one? Is it DR? No, it shouldn't be. Why don't it be DR3? Yeah, it is DR3. So there's no way I'd want to be entered long or trading short. I've got this support level here, which has got history and history as resistance. And we've got DS1 straight here. So the target would be there and the risk would be there. Ridiculous. So no, answer no from me. It seems that I'm never going to take this trade on a Monday. That's the way it appears anyway. Let's have a look at last week and see how you would have fared if you were trading this particular pair as a breakout. So we've got Friday, looks like a mess. What I should do is put the daily support and resistance on there, shouldn't I? That would make sense. Then we can see. So we'll go green with the high, we'll go red with the low. Righty. Weekly. What am I doing? Why did I do that? Don't want that. I went to the wrong one. Try again. Green on that one, red on that one. Well, that's much better. All right, that'll give us a good idea of where we would have got out roughly. So let's go back to Friday, and Friday didn't go anywhere near the resistance areas. That would have been a consideration as a take profit, depends on where you got into the market. There would have been the 9 o'clock bar, I believe. No, that's 11. That's the 9 o'clock bar. So the high of the range prior is there. The low of the range prior is there. You would have got taken. You wouldn't have taken the trade, right? Because you're trading straight into the daily pivot, and you would have got hammered, as the daily pivot does. On Thursday, the 9 o'clock bar is not there, but there. Again, a doji. So high of the range there, low of the range, same candle. You probably would have traded that. You would have had, nah, still poor risk to reward, isn't it? Risk is up here, rewards here. So probably not. But if you did, you would have got hammered. The 9 o'clock bar here is that one. So the low is there. The high is the high of that bar. So you would have been taken in long with DR1 up here, and you might have taken that. And once again, you would have got hammered. Not a good week. The high of this one, 8, 9, high is there. The low is there. Goodness me. Taken 3 days to get into the trades. You wouldn't have taken that. Well, you might have taken the trade, but you wouldn't have got triggered until Wednesday, a day later. And Monday, which we didn't take, looks like you may have had a winner. Where's the 9 o'clock bar? Not that one, but that one. Oh, no, you've been bad. But yeah, you would have entered underneath DS1. So yeah, not so good. Had you traded all those, you wouldn't have done very well. Righto, it is now 7:01 p.m. in Tasmania, Australia, which means the market in London has now opened. Before we have a look at today's game changer bars, we will update the trade that I'm still in, hanging on to Kiwi Swissy, hanging on by my fingernails at the moment, it would seem. We are long Kiwi Swissy, and we're trading above. Oh, we're on a weekly, actually, aren't we? We're trading above that bar there. And as you can see, we haven't had much joy with that yet. Waiting for this false break to play out, really. So price needs to get back into there and get a motor up its rear end. Terrible, terrible chart now, isn't it? Complete consolidation. Doesn't know what to do with itself. So just hanging on to that one. Didn't place an order this morning, but there were quite a few I was looking at. Let's have a quick squiz around the place and see what was on offer. I was mainly against the game changer bars. So we're going to go to the weekly chart. And on the weekly chart, we see a seller bar telling us to sell the Aussie versus the Swissy. But we've also got this double bottom sitting here and a higher low the previous week, which was a game changer bar. Had you traded that, and we didn't because we chose Kiwi Swissy, same result, we'd be in drawdown. But yeah, I think this is still looking good. Aussie versus the Swissy, potential reversal. Obviously counter trend, counter momentum, counter everything. So you've got to take that into consideration. So it's a small stake into these potential reversals and look to build a position as it goes up. The next of the game change. Oh, I better comment on that, hadn't I? So, look, under the rules of the game changer system that I made, this is tradable because the big boss or the chart pattern that's actually governing this pair is saying go short, and so is the game changer bar. Game changer bar is on the weekly, of course, but we confirm the big boss on the monthly. A couple of problems I've got. One is that we're in a range here, and we're at the bottom of that range, so I wouldn't really like to be trading it short. And of course, we've got that double bottom higher low in place, so I don't want to be trading that short. Although the rules that I made up, sorry, that I constructed, actually say you could trade that short. So that's Aussie Swissy. Swissy versus the yen, too hot to even touch for me at that level. Couldn't possibly buy at that price. Euro versus the CAD, suggesting that we are sellers. I'm actually on board with this. Would already have, from a directional point of view, but you already would have been triggered. Just like I said on Aussie versus the Swissy, this is in a clear range, and that range is very, very near the bottom. So although it is currently selling off, I would expect a little pause here and maybe even reversal on a weekly chart and take us back inside the range. So just not the right place for me, although I do agree with the direction, given that we've actually got a bigger range here these lows and these highs forming the range would come off the top. The other reason I didn't want to trade it is when I trade reversals or back into a range, I'm looking for a lower high. Now, this may well be technically a lower high, but for my money, a lower high is created when the market rallies, and the market has not rallied. The market has just gone sideways. So I'd much prefer to see price come back to here, maybe to this level, before I considered going short. Still see that range? Yes, it could be the lower high, no question about that. And if that's the case, I'll miss it because I'd much rather see that rally before I sold that one off. But directionally, I think it's sound. Euro versus the Swissy, I'm completely against this one as well. And the reason, as I've described before, on Aussie versus the Swissy, I think these are getting to buy levels rather than sell levels. Completely oversold, has been for a long, long time. No, I don't have a reversal pattern here, which is the only thing. No, sorry, it's not the only thing. I'm already exposed to the Swissy with the Kiwi Swissy, right? So I can't really justify adding to that risk on a perhaps chart pattern. It's a lovely candle pattern that I like, showing me a false break of that horizontal level. Really, it's a trade line, but it's a horizontal level. So you would enter the market there. You have to put your stop loss under here. You'd be trading straight into that resistance level, which is a bit dangerous anyway. Best case scenario here, price continues to fall as per the weekly game changer bar, hits the bottom here, gives me a double bottom, then I'll be looking for the higher low to trade it long. Although that looks like a peach of a setup, it's very, very tricky. I think it could well be a bull trap. That's Euro versus the Swissy, pound versus the CAD, 3 to go. Pound versus the CAD. Yeah, look, this one's a tricky one also. I can see 100% that this has come off this level multiple times. I can also see that it's probably a bit rangy, and the game changer bar suggesting that we sell here. A little bit of a tweezer top sitting there as well. Yeah, it's at a bit of a resistance level, but I'm inclined to think that this could go either way. Reason, Slingshot loves it when you get high test bars sitting on a resistance trade line, or in the opposite direction, low test bars sitting on a support trade line. So I could justify placing an order long here with a TP1 here, be very, very tight, but you get about 0.5 to 1 before you had to do that. Or you could play the game changer if you were so inclined. I'm not that way inclined because I think this has got range written all over it at the moment. I'm not sure where I want to go next. The trade line should tell me. If the trade line breaks and then gives me a sense of a false break, I could trade it that way. Or if it breaks, takes out this high, comes back and retests it, then I can look to trade it long. But at the moment, game changer bar says short. I'm not completely on board with that. Pound versus the Swissy, like all the Swissies, it's considerably oversold. Have had 3 days of last week, or sorry, 3 weeks of the last month, or this month of January, has been very, very positive for this pair, but it is strong resistance that it's facing at this moment. Has pulled off that last week, as you can see. Again, getting warnings here that this is going to break out to the high side, but warnings are one thing. Tradable setups are completely a different story. So I can't trade it yet, although it's very, very tempting to put a buy order above last week's candle and a sell order, a stop order below that. Don't have the right to do that with the chart pattern yet. I'd need to see a reversal. It's not there. You can call this a double bottom if you want, but in that case, I'm still looking for a higher low. So no, can't go. And again, I'm exposed Kiwi versus the Swissy. Speaking of which, there it is. And it's come up as a sell on the game changes this week. And I've been through the analysis on that, so there's no need to go any further. I will simply say that if this is a higher low, we're going to be happy. If it's not a higher low and we hit this this bottom again, we'll be unhappy. We'll see. But you know, we knew that this was full of risk when we entered the trade, so nothing's changed. The risk is still there, and more than happy to stay in that until the risk has been either run or won or done. So watch list is really, I suppose you could say, threefold this week. And I'm going to start with EuroCAD. I'll just re-mention it. I think this is an absolute sell, but I don't think it's now. I want to see that rally and the lower high. Pound CAD, same boat. I want to see what happens at this trade line before I enter. But I think it could go either way in the short term. I know this is a weekly chart, but I'll be looking for that level to break on the daily and maybe even the 4-hour charts as well. So break and retest, or break, false break, then short would be the go. And finally, one that I haven't mentioned, and that is Canadian dollar versus the NY, simply because it's banging its head on the ceiling here and finds it very, very difficult to get through it. Should it do so, then I would wait for a retest and look to join the party long. After all, it's been trending for quite some time. But the flip side of that, of course, is I'll be looking at the daily chart in particular for this trade line in concert with the horizontal level to break, maybe take that high, or take it out, that's fine, or match it and then come back underneath that area, retest it, give me the lower high after the double top, and then I can look to sell it off. So CAD versus the yen definitely on the watch list. Euro CAD, pound CAD. It's all about the CAD apparently this week. I'm not sure what direction the CAD will take, but to help me solve that problem, g'day Ash, how are you, mate? You're muted, buddy. I can't hear you.
I just I realised that as we were going there, mate. Yeah, do you know what? Interesting that you've picked out the CAD, because the CAD is my my trade this week as well. But it is against the Swissy, which I will show you.
Okay. We're going long CAD Swiss.
We are going to give it another go. We're going to give it another go. And I'll show you the way that I'm handling it, because it's one of those ones that we have. Let me see if I can get a better looking chart. That's better. Yeah, it's one of the ones that we've looked at before, and I do think that the value is there. It's and this one for me is not a timing one, which I quite like in many respects. I mean, yes, you've got a time sort of where the low or the high might be coming in, but you don't really need to worry too much about the setup if you believe you've got the turning point. It's a lot more general, and the reason for that is because of the swaps. So this is where I've kind of like pushed my way, attempting to push my way into it. I like there is a pivot round here, which is a problem, but I quite like the way that this may well kind of look at. Now this is a daily chart, so there's every chance that that it takes a long time if this works the way I think it's going to work. This is what I'm looking at here. So what I'm looking at is something you can probably already guess.
Yep.
Is that, and potentially that. And if that is the pattern, this took something of around about 65 days to form, which we're talking about 2 months. And we're looking at this kind of pushing well and truly out, even off the chart, but we're looking into February. Now, for me to hold this during that particular period is totally fine. It's a payer. So my idea really with this one is to put stops right at the low. So really going quite cheap. Go put the stops right at the lows. And not worry too much about a specific setup, not putting tight stops in to try and get a monthly run or anything like that. Just kind of putting this in just where it is. And the reason for that, obviously, is because it's come down so far. If this goes right the way to the top here, the May number in 2022, there's a 10-to-1 move there. And it can take as long as it wants. ultimately. And obviously the idea would be to kind of like build into the position as time goes on. So attempting to kind of getting down here and maybe getting a better setup, and then be able to move the stop a little bit tighter. But if this is the ultimate target, there's a lot of room. And when we look at this on a longer term time frame, that doesn't look beyond the realms of possibility, because even that has come down a long way since 2012 to kind of get to that particular point. So this was the run that we saw, and look how many times it kind of like it messed around in this area, top end of the range, but I don't see why we can't get back into that range. Now we've got kind of a clearing of sentiment and a clearing of what drove this market down in the first place. This is really to do with central banks kind of raising interest rates, hyperinflation. That appears to be kind of clearing now. Now, of course, the swaps won't be quite as positive by the time we get the inflation narrative kind of coming back, but they'll still be positive. You got the Swiss National Bank quite a distance away. The spread between the Swiss National Bank and the Bank of Canada is quite a distance away. So for them to close that gap completely and maybe even reverse it seems very, very unlikely to me. So that's the one I've entered now, mate. As I say, setup wise, I'm looking at this inverted head and shoulders, but as I say, that could take a long time to form. But while that is forming, as long as it does, if this is the head, then it's not going down below that, because the head looks like it's formed now. So as long as this is the head and this is the low, then this can take as long as it needs to, and the longer the better in some respects. So I'll be quite happy if this is still at this price in a year's time, as long as the spread between the Bank of England and the Bank of Canada and the Swiss National Bank stays the same.
Whilst you're on that subject, and that particular pair, did hear just before I came upstairs that 3 American troops had been killed.
Yeah.
I assume that's not good news. Well, that's not good news, and we'll see what the reaction is from the States, of course. If that escalates even further, it doesn't really bode well for that pair, does it?
It sort of does in a way, mate.
Really?
And I'll tell you why.
Okay.
Yeah. Because
oil price will go up?
Exactly.
Yeah.
Exactly. I mean,
I'm thinking the other way around, though, the market would go risk off, but I see your point.
Well, do you know what? It's one of those, isn't it? You're probably going to need to dive a bit deeper into the result of what happens. And also, right now it seems that the attacks are focused on stopping the ships and stopping oil and everything else. So so inflation would kick up. Yes, a bit of risk off may well come back into the market, but will they go towards this, or will it? Escalation. I think it could be a flip of a coin. Where which way any kind of currency goes during escalation could be a bit of a flip of a coin, because it's confusing, and also it could go one way one week and then flip on its head, the following week. So, difficult one for me. But I do think that the situation with what's going on with with oil specifically is beneficial for the Canadian dollar, and it seems that a lot of the conflict is centered around the oil market. So I mean, we've seen oil really take off the last few sessions.
Yeah.
And you'd think that would probably help out. That would help out the Canadian dollar right on top of this resistance zone as well. So, but everybody is going to want a retracement. But it does look, by all intents and purposes, that this is one now that people want. I mean, I suppose that was the absolute area to try and get into this in accordance to this trend line. But now we've got this situation with the attacks in the Red Sea. This probably has got further to go, and it's everybody's going to want to try and negate any genuine escalation with that, because we're back to where we started, with high inflation and high interest rates, and nobody really wants that. So difficult one. But I would say that oil is a decent market to trade right now. Every time that this one finds a scenario, it rallies, except for that we haven't really had that because it was over the weekend. Then it starts to calm down again as people decide what's going to happen. But the flare-ups are happening more and more and more often, which suggests that anywhere along here with oil is going to be a buy. And the other thing with it is that if it doesn't flare up, the global economy may well start to see a boost, and that's also pretty bullish for oil. So oil looks like the trade right now. Now we've confirmed, if you like, this bottom. It might need to come back, create an inverted head and shoulders. It might be a cup and handle. It might be a whole bunch of things. But we looks like we've just got this breakout of this trend line, and that is enough to suggest that we've got a trend change in this one. But we are a few days late. So if this one comes back, gives us a genuine pullback, then oil looks like a trade long. I was just going to touch on the COT data as well with a CAD Swiss, and this is the Swiss COT data, which is flat, not going anywhere. You look at the CAD, we did see some buying. We have seen some buying. It's having whips, big whips down, big whips up, but it looks like it's going in this direction. Where this becomes interesting against the CAD is really when you look at the euro. I know it's a long way around, but this is when you look at the euro, you see the euro selling off. And I think interesting that you're talking about the euro CAD as a long, because that's what speculators are also saying. Euro is selling off, CAD is buying up. So they're also saying the same as you. The difficult thing with the euro is something I completely I concur with you, is that the level's not particularly attractive. No. So when you and also I'll tell you what else is quite attractive right now is the euro dollar short. So when you sidestep euro dollar short, where you end up is the CAD Swiss long. If you want to kind of get some kind of brother to that particular currency pair, you go CAD Swiss. Euro dollar CAD Swiss. They've got a relationship because of their.
Sorry, I forgot to press the button.
Oh, no worries, mate. Because of their geographical area, their geographical relationship. So CAD Swiss is almost the same as playing a euro dollar short. Now, I like the euro dollar short, but it's similar. Where when I look at price, it's not as attractive as I'd like. Now, when you look through it, when you start drawing trend lines, bang on top of that one. This one looks like it's got a little bit more room to go. So there does look to be some room with the euro dollar, but it's got to get through here first. But the fact that it's on support, not so attractive. Europe's got CPI data this week. The United States. What's that? Sorry.
Fed this week as well.
Yeah, the United States got the Federal Reserve rate decision, and the UK has got the same thing. So we've got a glut of data this week. Really, really significant numbers, making trading that little bit more difficult. But CAD Swiss, unrelated in that respect. They haven't got such big numbers, so that's one of the reasons I've plumped for that one, mate. So CAD Swiss long is my trade this week.
Okay, so we've got Kiwi Swiss still going. We've got CAD Swiss. I want to trade Euro Swiss. I want to trade Pound Swiss, and I want to trade Aussie Swiss. I don't think I'll be doing any of those things until I get into profit.
Yeah.
So, because at the end of the day, we are going super counter trend and super counter momentum.
Yes.
So
yes,
we've got to be just a little bit careful on how much we put on the table here.
Yeah, exactly, mate. Which is exactly why I've played it the way I've played it, because you're absolutely right. There's no point in getting into this one with the opinion that it's going it's going long. What we can say is that this may well be going sideways, and after sideways, there's a decent chance it goes long. But it's not time to pull the trigger to say this is ready to go. As I say, I would look at this and say, well, this is a potential left shoulder, which means we need a right shoulder. And if that pattern is to form, and a right shoulder could take weeks. But my point is that you get paid for holding. And if you get paid for holding and it is a right shoulder carve out, that makes the head the low. And that means that we can put stops there and a very, very light position, as you quite rightly point out. So I think it's worth a go, but it is speculative. It's a very speculative move. And the only reason I haven't gone for the ones that are a little bit more obvious, as in they're moving intraday, like the euro dollar or like the euro CAD, is that I just don't see the value.
No,
in
the wrong
those.
price. Yep.
Yeah, definitely, definitely. Same with WTI. WTI is a great trade long, undoubtedly, but I don't see the value. There is a suggestion that that the dollar does maybe start to spike to the upside as well. I mean, if you look at this on, and this isn't good this isn't good for gold particularly. Look at this on the Treasury yield, and this is looking like it's turned around. So is the Treasury yield going back up to this? Got a bit of a gap there. It might well try and look to close. Is this one turning around? It looks like it may be. So it's certainly moved. It's definitely created higher highs and higher lows over the last few weeks. So the Treasury, the 10-year going long, does suggest dollar long, and that supports euro dollar short. It will also support gold short as well. So let's have a look at gold very, very briefly.
Had an interesting start to the week, gold.
Yeah, it has, mate. But is this because of what you were mentioning earlier on about those attacks? When we're talking about
maybe.
risk off,
Yeah.
this is really the play. Everybody kind of like is thinking, gold is genuine protection, but I don't like really the price action with gold. The price action with gold is just suggesting that there's a chance that we've actually kind of like pierced this uptrend now, and we're starting to form some heaviness here. So today's bar is going to be quite key. It got back inside the area here. It's out of the area again. Well, I suppose if you need to redraw that line actually. So it needs to take out these lows. And if it does take out the lows, there's going to be a suggestion that we are actually traveling lower. So yeah, gold is one that I think as well to watch for some downside. But what's been interesting is that, when you look at these last week, pretty small looking bar. And I think you could go around the whole week. And I know there's big tails here, so suggesting that there was some movement, but the body's very, very small. Look at the yen. That was with a Bank of Japan rate decision. It opened and closed pretty much where it started. Same with the Euro Aussie. You could literally go down the list here. The only one that's actually sort of collapsing a bit, the Euro is not great against the pound, not great against the Swissy. So the euro didn't have a great week, but as I say, look at this one, pound CAD. So right across the board, there is indecision. Nobody really knows what to do just yet. There's no sort of genuine kind of volatility. So intraday traders probably finding this very, very difficult. You're probably having a field day, but intraday traders probably finding it quite difficult.
It's no good for me at the
Right.
moment. I haven't got the time to do so. But when I looked at the gold chart, the breakout trade there for last week wouldn't have been very nice at all.
Yeah.
Because it was, as you say, very tightly packed and moving
Yeah.
from one to the other, which is good if you're in front of the charts and can recognize the highs and the lows. But yeah, I tend to agree. I think it's a little bit rugged in there at the moment.
It is rugged, and I'll tell you what else had a good week last week was the FTSE. This you look at, and this is really sort of 2 days of upsides. Thursday, Friday was just absolutely flying on the FTSE 100, and that was appearingly anyway due to some of the data from the United States, because they produced some pretty good GDP numbers, and yet doing it without any major inflation. So it was positive really for the FTSE towards the end of last week. So last week we finished the week on Thursday with GDP quarter on quarter 3.3% from the United States, and even though it was a reduction from the 4.9, they were expecting 2%. So much better than expected on that. Core PC prices at 2%, which was flat. PC prices on the quarter 1.7 from 2.6, so disinflation there. And then on Friday we had the core PC price index coming at 2.9% from 3.2%. So there was a few bits and pieces which were supportive of growth with disinflation. And that really set the FTSE on its way, and it needed to be. It was kind of like not look at the collapse with the FTSE. So
Mm.
now it doesn't look like this is a retest of this area now at all. It should have gone to there really, but this isn't looking like a dead cat bounce. This is currently appearing like it could actually continue to go. And if oil does what it's doing, looks like it's broken through that trend line there. All it was doing, it will help the FTSE. So yeah, a few things to watch out for actually in this environment, mate. But this is a difficult market to trade, undoubtedly.
Yeah, what do you think the Fed's going to do? I mean, they won't move on interest rates because it's toss of the coin time now, isn't it? They've got to watch that data very, very closely. And I suspect that's all they're going to say. We're now maybe have they forecast? I know the commentators were forecasting 5 cuts in the next 12 months or some stupid thing. I don't think that's going to happen for sure.
No.
Is the Fed talking that way? I haven't looked at the last couple of statements.
The Fed, I think, is going to, really, they should still have a steady hand. They should be coming out and saying, there's nothing to suggest that we should be lowering interest rates right now. The data's looking good, it's improving, but we should stay on the path because we haven't beaten the inflation narrative just yet. So talking about cuts at any point in the year, 5, 3, 2, 1, they shouldn't be doing that.
Yeah,
whether they do may well come down to pressure put on them from the Biden administration, because of course it's election year. So that is going to be something that is, I think, unpredictable, because what people should do and what kind of goes on behind the scenes and how people eventually come out and comment is something is partly to do with the machinery. And not to do with what is observed and the correct sort of stance. So I think that it could be interesting, what happens. But the reality is, I don't think it matters. If he says, if Jerome Powell comes out and says, yeah, there's a decent chance we're going to be cutting this year, I don't think we should pay too much heed to. It will cause the market to move, but actually, in factual kind of observation of what the economic picture's like, I don't think he can say that. I think that will be placating the Biden administration if he says something like that. So I don't think it's going to matter to the economy. It will probably matter to the market, but I don't think it'll matter to the economy.
Actually, I must go back 7 years in the charts and have a look and see what the market did leading up to and post the 2000, and when did Trump get elected? 7 years ago, isn't it?
Yeah. Well, he's he's looking good, isn't he, Trump? I mean, it's
unbelievable. Well, not
he's
unbelievable.
looking like he's going to do it again.
Yeah, it certainly looks that way. And if Biden is as standing as the incumbent again, I can't see that Trump not being the president again.
No, absolutely. Yeah, I mean it's astonishing, really, because I think the first time round we thought it was a bit like Brexit. You could have that vote another 20 times and it wouldn't have happened the same way. But this looks like it's going to happen in exactly in exactly the same way. And for a man who will be, 80 years old, give or take, it's astonishing. It's astonishing. I mean, I guess in that respect, fair play to him. Is he sharp? I don't know. Is he still sharp? Sharp enough at 80 to kind of lead the country and the world? If he is, you have to take your hat off to him for that.
Are we talking about Trump or Biden?
Trump.
I thought you were talking about Biden because I don't think he can stay awake.
No. Biden is he's asleep, isn't he? I mean, he's so Biden's over 80, but Trump will be practically there by the time he gets elected.
I don't think there's any lack of energy in him. But look at the way he walks around the place.
Yeah, it's mad.
All that shit going on. He's amazing, but I wouldn't like to be in America if it happens, frankly. But it looks very much like it will.
Yeah.
Watch this space.
Yeah.
And I don't, as I say, I'm going to go back and it is different this time. because last time it was, no, really, they're not going to vote him in, surely.
Yeah, yeah, yeah.
And they
Well,
did.
exactly.
And now it's completely reversed. The way I look at it anyway.
Yeah, yeah, I totally agree. I totally agree. It's yeah, well, I remember our conversations you know,
Mm,
4 and a bit years ago, sort of like saying, no, we're longer than that. Yeah, 7 years
yeah,
ago,
7.
kind of
Yeah.
saying, yeah, he won't get in. There's not a chance. But and this is the thing, he was up against Hillary Clinton that time round, but now he's up against Joe Biden. I mean, I suppose he was up against Joe Biden when he lost, but it's a completely different prospect this time out. So if he
Well,
if he gets the if he
he
gets the
gave her an
Republican,
absolute pasting, didn't he?
yeah, he
Like
did,
you
yeah.
can imagine what he's going to say about Sleepy Joe. My
Oh
goodness.
yeah, yeah. I mean, I mean, Trump is happy to go as low as he needs
Oh yeah.
to win, and
Yeah.
yeah, it doesn't look good for Joe Biden.
Guys, got any ideas? We haven't got George today, so he's celebrating his birthday. So happy for you to ask your questions. If not, or give us some ideas about what you're thinking, what you're looking to trade this week. If not, we might even have an early mark because I think we've
Yeah,
expired our thoughts for the week, and
yeah,
I think we're probably waiting for a bit of news. I think.
yeah. And this is the way that the show is meant to go anyway, isn't it? We sort of try and get our bits done by half past the hour now,
Yep.
and then open the floor. So if the floor is quiet, then we will dance somewhere else. But I'm not surprised the floor is quiet because I do think it's a quite a sleepy market, to kind of
Mm,
use Joe Biden's
yep.
analogy. But it's quite a sleepy market. It's not really sure. There's a few things kind of popping around, but there's not a whole bunch of volatility and liquidity that seems to be sort of floating around. Oh, great call by you on Lot as well, mate. Lotus. Um,
Oh, don't know yet.
well, it's popped. It's
Yeah,
popped,
no,
which is
I know, not enough. I need more.
not enough, not enough. But still,
I mean, that's
I mean,
that's my
timing was
fourth
great.
position in it, so I'm happy.
Nice,
Yeah,
nice.
yeah, it's
Yeah, I
going well.
think yeah, doing really well there. Tell you what, you'll be done in I don't know how long is this going to take? 10 years we're going to be looking at? A year?
Well, year, I'll be really happy.
Yeah.
Anything outside of that, I'll be really, really happy. And expecting
Yeah.
more than a year. Yeah,
Yeah.
could go for quite a while.
Yeah,
So
might be a
yeah,
whole
I'll
decade.
just keep buying the dips.
Yeah, loving it. Loving the
All right,
work, mates. Brilliant stuff. Okay, cool.
excellent.
I will see you next week. Thanks
You
as
bet.
always for being my trading buddy and loving the calls. I think you've uncovered an absolute gem there. Um, Everybody else have a great week as well, and we will come back to the market and see if it's started to move. It may well do. Turn of the month, we might actually start to see something happen.
Towards the end of the week, I'm pretty sure we will, with all of those
Yes. Well, today.
data
Sorry,
releases.
towards the yeah.
Mm.
Fair
All
point.
right, guys, have a great week. Thanks, Ash. Catch you later. Bye, everybody. Bye for now.